Sandeep, so where are you constructive on? I mean, are you constructive on TCS, Infi, HCL, large IT service vendors? Are you constructive on the mid-sized ones? Because some of them have stated that they'll be a lot more nimble and agile for the generative AI or the AI piece. Or are you constructive on the ER&D names? Because those stocks are not seeing any sunset. Most of them, KPIT, etc., or product companies like Persistent, are really doing well.
So, all the three very interesting questions, I will answer one after another. So first of all, I am very constructive in the large cap space in the names which are not expensive and where there is some turnaround. So Techem and HCL Tech, I think there is good upside. HCL Tech, will always have one or two bad quarter out of 4 quarters. So it is not a company which will give you all 4 quarters very good or stable. So compared to that, HCL Tech will always give you stable to decent quarter. Infosys will have one bad quarter, three decent quarters. HCL Tech can have two bad quarters, two very good quarters. So these companies have different kind of business models. But I think at current valuation, Techem and HCL Tech both are good bets. I would say that if Infi and TCS can give you 10-15% from here, these stocks if you keep for a year can give you 25-30%. So that is number one. Coming to your second question, that good quality mid cap. So you are absolutely right. In the mid cap also you have to bifurcate based on their offerings. So the IT services ones, I would be little cautious because there I think they are very expensive right now. And even if good growth comes and margin improvement happens, they don't become cheap. So there would be a 10-15% upside because of their small size and lesser liquidity. But they are not at all one which you should look at. The third space, which is ER&D, I think that is the most interesting space, and the reason for it, see, last 30 years, what we have achieved is massive penetration in the developed market, particularly the US, and to some extent in UK and Europe in the IT services space. Now, if you see the whole world, because of this smart products uptake, which is taking, every product is becoming smart, everything is getting connected, generative AI and everything. So you need connected world, you need connected data. So for that, what is happening that every product which anyone is making, even the washing machines, the refrigerators, the coolers, the ovens, every equipment, household equipment, everything which you use in office, home, everything is now connected, and data is continuously monitored and controlled. So for that you need smart product, and that smart product means that when you are developing the product itself, you need someone who can bridge the gap between a electronics engineer or mechanical engineer or metallurgical engineer and a software engineer. So that is the reason ER&D is picking up in a very big way. In my view, there is much more shortage of a software engineer with mechanical engineering knowledge and other engineering field knowledge. And because of that, ER&D is now picking up in a big way, and the penetration level is very, very low. So I think that 10 to 15 years, ER&D outsourcing could do very, very well for India. And that is the reason, Persistent, KPIT, Tata Elxsi, all LTTS, all these names which you mentioned, despite not delivering good numbers in 1 or 2 quarters, they don't go down much. There is always a buyer who stands because they understand that what they have seen in last 20-30 years in IT services, they will be seeing that in next 20-30 years in the ER&D space. So it is a long-term, very substantial return bet in my view.